Good morning, traders. It's 8 a.m. Chicago time on Thursday, the 17th of August, 2023. This is episode number 2518 on a stormy, rainy, dark Chicago day. It was gorgeous yesterday, but it's that time of year. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. The convergent trading pre-market summary sheet here. We did start with a mixed posture. We're still in a mixed posture, but we're starting to lean risk on slightish. Walmart reported this morning, Walmart being the Goliath that it is. Unbelievable. Q2, $160 billion in revenue. $161.632 billion. Just a ginormous company. They beat earnings by 8%. They came in at $1.84 versus $1.70. And that's the big one for today. After the close, we have Applied Materials, $6 billion in revenue. But again, I want to repeat, Walmart in one quarter generated $161 billion in revenue. That's a lot of Chinese imports, I tell you. So that's the key earnings piece right there. We know retailers have been beating the estimates lately. We saw it with Home Depot, we saw it with Target, and so on. U.S. initial claims this morning came in at initial jobless claims came in at 239,000, slightly better than 240,000 expected, definitely better than the prior week of 250,000 new claims. Philadelphia Fed came in slightly higher than expected. Philly Fed, not a huge number, but still an important manufacturing index, came in at 12, was expected at negative 10. Markets still digesting and reeling and masticating the FOMC minutes yesterday. The minutes show that most officials saw significant upside risks to inflation, but some are turning cautious about raising rates too high. ECB's Kazakh says good news, inflation coming down, and needs to see new forecasts before deciding on hikes. China reportedly told state banks to escalate yuan intervention this week. BAE to buy Ball's aerospace business for $5.6 billion, and Tesla's revamped Model 3 mass China output may begin next month. So that's what we have. What's on deck for today? We have the CB leading index coming out at 10. We have natural gas at 10:30. We have a 4, an 8 for 8 and a 4 week auction 11:30 at 12. We have a 2-year bond, 2-year 15-year 2-year bond out of that's Canada at 12 o'clock. Disregard. And then 12 o'clock we have the 15-year mortgage rate and the 30-year mortgage rate. The prior was 6.96%. Can you imagine those mortgage rates just doubling and almost tripling? And then this evening, Japan has the inflation rate. We're expecting 2.5% year on year. The prior is 3.3%. Okay, so that's what's scheduled, what has taken place overnight, what the event risk is. Looking at the S&P, the S&P is I don't know that I would call it trend, but it has tested. We finished weak yesterday. That was a week low in the S&P. We went to 44.1850. If you recall from yesterday's show, we talked about 44.20 being a key test and very much on deck, unless we take out 90.93. Raise your hand if you didn't, if you remember that. And so the expectation overnight, because we had a multi-distribution sell-off profile yesterday, the expectation overnight is a continuation lower, which we got. We pushed into 4409.50, which is a CT stock zone for us, and then it's bouncing since then. And what it's doing is it is trending up. The delta is not playing along at all. The volume's pretty good, 209,000 contracts so far. The inventory is 52% long, and the range is 27 and a quarter points, which is pretty decent. So decent volume, okay range. Point of control beneath us at 44.30. That point of control shifted very, very quickly down. Let's take a look at, here's what I talked about yesterday. This is from yesterday's video. Bada bing, bada boom. This was the plan. The plan was that if we are opening down here, oops, let's switch this. If we are opening down here, expecting resistance all the way up the chain, value low, value high, all the way through to 90.93. As long as the ES, this was the key plan for yesterday, as long as the ES is below 90.93, that over underline, it's very likely to check the last acceptance price, which was 44.20. Okay, here's what actually happened. Here's your ES. There it is. So we were right here in the trader bite. We were below the prior day's value area. The value area is up here. And what it did is it opened, and it looked like, by the way, we had a really sweet zipper on the open that held pretty nice base for an early long. Didn't take it, but very, very rare that I see, in the style that I approach the market with. Very, very rare that I actually see a trade form right at the open. And look at this baby right here. It puts in a low, it puts in this beautiful zipper, pushes above it, and then tests it from above, and then starts to turn up, giving us a 44.50 long setup. And that setup was targeting 56 really at best. Looking for settlement, the 55-56 area, and if it does run, we're looking for it to go to 44.60 and 65, and that's what it did. It went to 65 here. 65 now being a key area to monitor going forward. I'll show you that on the big picture, but for now, let's look at the active chart here. This is just the intraday trading chart and how it rotated. We go to 65, pull back, we push again. So we go to 65.50, we push again, and on the next run we do a lower high at 65 and a quarter. So we miss by a tick, and then we give up the mid VWAP, this whole day generated levels. Nothing to do here on the short side at all until it gave this up, and then we had the IB stat. Once the IB stat was broken, now we're stalking for the short side, and the first opportunity to get short, a John P. Classic from CT, one of the mavens there, a pullback to the IB low, and for short, and then it ends up squeezing back to the mid. Again, the blue line, the solid blue line is RTH. The dashed blue line is full session. Those are mids. The cyan lines here are full session VWAP and RTH VWAP. Good references to have on a chart. They're not lagging indicators. The VWAP somewhat is, but the VWAP's not based on time. It's based on volume. Pretty good indicator to have on. And then it finally gets the continuation. So we get a nice little impulse down here, but it reverses that impulse with this push higher, making it difficult to hold the short, in my opinion. And it finally pushes through, and then it squeezes even higher, and then we get this really big move down, and we finally get to the 44.20. Look at that, right? Pretty sweet. Pushes to the 44.20. So now we're at that MC point of control at 44.20, and it settles at 44.20, pushes through to 18.5, so 6 ticks right here, and ends up settling at the 20. And then because we had such a poor low here on our TH, we had a relatively poor low, and we closed right at the low. The expectation is the auction is not done, so we would expect it to continue lower. I did not anticipate 44.09, but whatever. The overnight session is somewhat unpredictable to me. But since then, it pushed lower into the Asian session, and then as soon as Europe came in, right in here, we surfed the VWAP, and we have a multi-distribution active price discovery profile. Oh, you know it. You know the cigarette's coming. This dude, cool dude. I should draw a fedora on him. So we got a tap of the full session VWAP, and what we have in the overnight session is a weak high on a multi-distribution active discovery up profile. The catch is the delta's negative despite this movement up. The delta remains negative, which is kind of interesting because it opened down here. The price is relatively positive by about, whatever, 12 points or so. The delta is negative. We'll see how that reconciles itself on the open. And then looking at the bigger picture real quick, I want to bring your attention to the fact that we tried to take out this value area and the point of control from the prior session, could not. And then what we did is we stopped at the 65. And if you look at the profile here, what's obvious to you from this profile? If you look at the profile, you'll see that this is a weak high. So the 65 is something you're going to want to mark on your charts with either a line or preferably a zone or band. This is a number that we have to watch out for. We still have the 90 to 93 as a key over under, but now the 65 gives us the first shot across the bow that the buyers are stepping in. We have not been able to take back this blunt profile, very, very blunt profile, multi-distribution discovery profile. Let's turn on volume here so you can see what it looks like in volume. You can see in volume very, very blunt, very much a profile that's seen some pretty active discovery. And so today we're opening in range. I don't believe there's value from yesterday. I don't believe yesterday was balanced, so I don't see value in yesterday, but we're opening in range. We've got the VPOC at the low end of the range. Believe it or not, yesterday's VPOC is at 44.20-ish, I think. The TPOC, the TPO point of control, is at 40. And I'm going to disregard that because there's more accuracy to the volume profile than there is to the market profile. But we don't have balance, and so I'm going to be very suspicious this morning of any attempt higher. Okay, and that suspicion will be canceled if we have an open test drive, open drive up. That's sort of behavior on the open where we have an actual push, an actual directional push. Yes, sorry about that. Yes, you're right. It's up here. I was looking at a full session profile. I apologize. In either case, well, what we do know is we didn't migrate this point of control, this VPOC down. To me, What we would like to see this morning, which is very, very likely, is a rebalance of the overnight, an attempt to push lower, refuted, and then I'm looking for this thing to really squeeze up now that we're at 44.20. Remember, 44.20 here represents the MC point of control in this region. The 44.20 is the balance point in this region, and I expect us to bounce off of it. So I'm looking for that 65 to get challenged today if we have the range, which we do. It's only 30 points up. So if we pull back into 2025, it still gives us 40 points of range, well within the realm of being challenged. So I'm not saying today's going to be a reversal day, but watch out because we have reached a pretty important landmark here at 44.20. The hesitation on the way down yesterday, if you were short, you probably saw that it was really hesitating on the way down. A lot of collisions on the bid, so absorption on the bid, and I'm not sure how that's going to play out, but I'm very cautious. Like, this isn't a market where I'd want to get short in a hole here. However, if it opens, tries to push higher, is unable, is weak pulling back, and then starts to squeeze that low, then I'm going to be forced to push trades on the short side, looking for 4,400 and then ultimately 43.85 would be the target down below. Okay, so it's either 44.65 or 43.85. Okay, 85 is about 50 points away to the downside, 65 is about 30 points away to the upside. So just watch the open very carefully. Going to be sitting on my hands right at the open today. A quick look at the bigger picture. So the bigger picture is, yes, we gapped up, we squeezed up, we put in this high for the year, whatever it was, 46.35 or whatever it is. Then we gapped down, right? We gapped down right here. The Thursday a week ago, and we basically traded and balanced. Look at how blunt this balance is. And then from there, we broke lower below the 44.80. We broke lower and formed another few days of balance. And then yesterday, we were unable to pull back and we pushed lower. But overall, we've arrived at prior balance. So if you're myopic and you're looking at just a few days of data, you might think, okay, free and clear. But what I'm telling you here, based on the profiles, we're up against some potential support. So just pay attention there. I wouldn't overcommit to the short side. Mark my words. We'll check tomorrow what the outcome is, but I don't believe that committing, pushing the short side today would be a wise decision. We'll see. The market might prove me wrong, and it often does. The Nasdaq, same situation, relatively weak high. The Nasdaq really struggled to sell off, and it finally let go, finishing pretty weak. It squeezed the low by a fair amount, by about 60 points or so, 50 points, and has come back into the range, and it's battling in the 15,000. This is not ideal for the Nasdaq. This is not ideal for the Nasdaq to open up right at this key strike number. Again, we're opening in range. Well, there's no value, so we're opening in range in the Nasdaq. So we're expecting a pretty choppy open. What I expect the Nasdaq to do also is, given some clues yesterday from the order flow and how it traded, it is trying to find a bottom. It really is, and it succeeds momentarily before the next push lower. The Nasdaq is really ripe for a short squeeze, in my opinion, but trade what you see, not what you think. So overall, we're going to look at the Nasdaq and say, well, it broke the inside bar to the downside. That's pretty bearish. It is reestablishing one-time framing down. Okay, this is your pivot bar, this is your first day, and this is your one time framing being established. So today, don't be too shocked if the NASDAQ just tries and simply pulls back to 15,100, 15,105 and just holds steady in this range and just kind of sits sideways for the rest of the session. I have low expectations for this session is the bottom line. Okay. That's it. Crude did its thing. Those of you who are watching crude, remember I talked about, hey, if this thing, it opened here during the trader bite, and I said, man, if this thing gives up this 80-40, we're very likely to find ourselves at the 79.75 and the 79 quarter, and it went to 79.28 yesterday. A very clear double distribution day yesterday. We're opening in the upper distribution. What we'll want to see in crude is it opened at the low just now and is pushing higher and forming short-term value up here. The open is going to be your LIS for today. If it gives up the open here and extends the bracket lower, pretty good opportunity for a retest to 79.50, 79.38. Crude is shifting down as we had talked about and expected. Okay, good luck everyone. Hopefully you're picking. Hey, there's a poll there. The question I ask is, do you trade better in higher volatility or worse? 71% of you so far have said better, 70%, 30% worse, which is kind of interesting. I definitely trade better in volatility. Volatility to me is like a market that's running at 4 times speed. I can see what it wants to do much more easily than when there is no volatility. So I prefer volatility, but that's not for everybody. Remember, with higher volatility, you get higher rotations. You got to cut down on your size, and then you have to widen your targets and stops to compensate for your risk factor. So just wanted to see what your guys' opinion is, but definitely I trade better in higher volatility. The other thing I wanted to leave you with here is just remember the purpose of you being here is not really entertainment. It's, glad you think it's entertainment. I don't think I'm entertaining, but just remember that your goal is with every session to check your work and refine your plan. You should be taking notes on what makes sense to you and what should be incorporated or looked at in your plan. Just try to make the best of your time here every morning. That's the goal. Okay, so don't just attend and take my word for it and move on. Attend, take notes, look at what you think might happen, look at what the market does. We review it every morning, what the market did, and discuss what or why. And you should be picking up nuggets, several times a week, if not every day, kind of reinforcing the same message over and over. And that's the purpose of this. Okay, good luck, and I'll catch you tomorrow. Don't forget to hit the like button, and if you're not a subscriber to the YouTube channel, it's free. Just make sure you subscribe. You can find that at ft71.com/YouTube lowercase. It'll put you to the subscription button and you can subscribe to the channel. Take care.